We also have a look at hog markets this week with University of Missouri Extension Ag economist Scott Brown. The U.S. inventory of hogs and pigs at the beginning of December was up 4% from December 2015, but contrary to the previous 3 quarters of the year, it wasn't record high. The number of animals in March, June, and September of 2016 were all the most ever for those months, as were the market hog inventories for all 4 quarters of the year. That abundant supply has helped push pork prices lower in the grocery store. The retail value for pork averaged $3.62 per pound in November, the cheapest level in nearly 3.5 years. But foreign demand was the big story this week. Export totals released Monday showed pork shipments during November were the highest for any month on record, with data dating back to January 1989. We started there when we talked with Scott Tuesday afternoon by asking where the strength came from.
Yeah, so Jeff, we see a number of markets that are very important in terms of pork exports for November out of the United States. Mexico tops that list. It was really a country that started very slow for us, with exports being below year-ago levels for the first 5 of 7 months in 2016, but up nearly 30 million pounds for November this year. That was a very strong increase and really lays the way for us, I believe, to think about a stronger 2017 in Mexico. You follow that up with Japan also being positive in the November trade, up another 20 million pounds relative to a year ago for November. And as well, we can talk about China. China up a little less than 15 million pounds in that November export data. That's a nice increase, but still well below the kinds of levels that we talk about for China. I believe back in November of 2011, we would have talked about moving in excess of 100 million pounds. So you take those 3 countries, and that was much of the strength. I think we can also look at some new places that are growing as well. Central South America, where we were up in export volume in November, again, sets the stage perhaps for some additional growth as we go into 2017.
What things would hurt those export markets?
Well, I think number one for us, you think about the strength of the U.S. dollar, and we continue to remind everyone that a stronger dollar certainly hurts our ability to move pork exports out of the United States. So that's one of the big ones that we continue to watch, especially given the dollar strengthened a little bit as we finish 2016. As well, we can talk about disease events sometimes affecting trade or shutting off trade. You know, those are the 2 big ones that I think really could affect us as we look into 2017.
Let's move to the quarterly Hogs and Pigs Report. What did it show you, Scott?
Well, number one, we got a lot more hogs than we ever thought we would, pre-report estimates. I don't care what category you looked at out of hogs and pigs, there wasn't much to talk about except numbers that were well above expectations. You know, you look at the breeding inventory coming in at 1.5% greater than a year ago. Most analysts would have thought that would have been fairly flat pre-report, so more sows to deal with as we move into 2017. I think when you look at revisions to sows farrowed, we're up now talking about 4% in this last quarter when we thought we might have been flat before, so more pigs. And the inventory numbers on market hogs were up a little more than 2% in market hog inventory that we're probably slaughtering today. As you look ahead in the next couple of months, all the rest of the categories up 4% or more relative to a year ago. So it tells me we have a lot more hogs to deal with as we look at early 2017, and if the breeding inventory and sows farrowing numbers are any indication, that may continue for the remainder of this year.
So if margins are negative, Scott, is there any intended contraction or supply rationing that happens this year?
Well, we'll have to wait and see how the year unfolds. For me, I think it's very much a balancing act between what's been very strong demand, both domestic and international, for pork products. Relative to that supply side, we really haven't seen to this point much downward pressure on sow inventories, and I think when you look at the increasing in processing facilities that we see coming on board in 2017, we are seeing many respond, trying to make sure that we fill that additional shackle space.
Describe for me how markets closed out 2016 and have entered 2017.
Yeah, frankly, as we closed 2016, it was fairly strong. The day of hogs and pigs, we got a little bit of negative reaction on markets as a result of those big numbers. But frankly, since mid-October, we've been climbing in terms of hog prices and really continued at that higher level for the early part here of 2017. And that really returns us to where we were back in October if you think about futures markets in 2017. Futures levels in August about the levels where we are today. after finding that low in mid-October. So we've seen some strength that frankly we probably wouldn't have expected as we looked at the latter stages of 2016.
The resulting impact on margins?
I think we're looking at margins that aren't very good, but maybe some folks are seeing a little bit of black ink. I think on average we continue to talk about margins that are anywhere from $3 to $4 a hundred negative on average across the United States. And I think that will continue to keep pressure on U.S. pork producers, and hopefully we put a good corn crop in the bin to keep feed costs low.
USDA's quarterly hogs and pigs estimates also showed Nebraska led the nation in pigs per litter for the 12 months leading up to December's report. Nebraska's producers averaged 11.4 pigs per litter, well ahead of the national average of 10.5.